Hello everyone, and welcome back to another video. Tonight we're going to be going over some advanced price signatures that we must know to improve our trading, and of course we're going to utilize time and price. That's what we're going to be looking at. Those are the two elements that will transform our trading into an expert. So going to the first example here, we're going to look at NASDAQ's 1 minute time frame. And as you can see here, there's a lot of markups on the chart. I'm sure you guys know who are watching this video how I engage with price utilizing macro power of 3. If you are not aware of that, there are plenty of videos on my YouTube channel in our free Discord to go over how I engage price in that way. And of course, we're going to talk about it here. But if you want more examples and more in-depth lesson and more videos on macro power of 3 specifically, be sure to check out the other videos. So number one, our priority, whether we are planning for a session, planning for a week, planning for a trade, and all the way down to that trade execution, our priority is the draw on liquidity. I say it all the time. It will save you a lot of trouble in those scenarios where you don't have a clear draw on liquidity and or when you have equal highs above market price and equal lows below market price. If you don't do anything in those scenarios and just wait for a clear depiction of what price is telling you in terms of that draw on liquidity, your life will be a lot easier. So as we can see in this example here, and the rest of the examples that we're going to go through tonight are from today's price action. It is December 5th, 2024. If you're watching this, weeks later, months later, we're using NASDAQ's December contracts NQZ 2024. Okay. But we right here have clear as day engineered buy side liquidity. Above that, what do we have? A session high. This is the opening range high. Okay. Before we see this low made in the reversal that we'll get into, what do we also see on the other side of the range? A low here, and a low internally here. So they're building up both sides of the range. So when we see this occurring, it's important to not try to impose our will in the market. It's important to stay patient because if you can withstand this chop, consolidation, seek, and destroy, whatever you want to call it, and then wait for one side of the range to get purged, all you have to do is wait for an invalidation. In this case, since we saw a long recovery, after the manipulation, all you have to wait for is the invalidation of a premium PD array, which is just a bearish fair value gap or a SIBI. Okay, but there's more into this. I want you guys to think of this from more of a practical standpoint, right? Who's been making money? Who's stopped out? Who isn't stopped out? Okay, we have drawn liquidity here, but we had drawn liquidity down here. Now, you can see this annotation right here and why it's so important. This is London low, so a session low. And where are these internal 1 minute swing lows falling short of? That session London low. So this is engineered sell side. So they're inducing longs when we're chopping in here who are getting in early. Ultimately, as we can see, they had the correct bias, they had the correct direction on where they believed price would go, but they did not understand the value of time in waiting for one side to be purged. So on this move down, what do we want to see? I often mention, we want to see when we're bullish, while the manipulation phase is taking place, as much buy-side liquidity left behind for us to target. This is just added confluence, more of a reason after we spot a reversal to expect price to go and attack buy-side liquidity, premium inefficiencies, higher prices. Okay, but when we see this manipulation phase occur, what's happening? Those early longs are getting stopped out and breakout traders are getting trapped below these lows. So you can see right here, we start to dig down and then randomly, and I say that as a joke, right at 1050, we zoom lower and what do? Sweep that internal, lower time frame, engineered sell side, and London low, that's session low, okay? When we read price this way, we're not fooled by this move, right? These energetic, quick moves after lots of consolidation with equals on both sides, these quick moves are designed to make us emotional, to think irrationally, and to feel FOMO and make quick decisions and feel like it's going to take off lower without us. But we don't think that way. We understand macro power of 3, and that brings us to the actual setup where we have 1050 macro opening price. That's this blue line right here. Refer to the checklist video. I posted a few videos back on my channel. I'll link that in one of these upper corners right now. You should see it, but you can just scrub back as well. If you missed that video, it's an entry checklist on 5 things that need to occur in order to trade one of these setups. I already mentioned one being drawn liquidity, but as we see here, what's occurring? Aggressively going below macro open, sweeping sell side liquidity here, sweeping sell side liquidity here, right? So again, from that practical standpoint, early longs are trapped, breakout shorts are trapped, right? And I should say early longs are stopped out. Breakout shorts are trapped here, okay? Our patience is going to reward us now with this candle's close. Now, what's happening here? This is a SIBI, and you can say, well, why are you anchoring it there? There's a little volume imbalance in here, and typically, if there's a volume imbalance in that fair value gap formation, I will include that in my anchoring, right? Regardless, we're closing above that here, and then we spend some time in it, and what are we doing? We're chopping around in it, but are the bodies respecting this macro inversion? Yes, right? The bodies tell the story. Finally, we do take off, sweep these internal highs as we enter what? The 1150 macro. And the algorithm is offering you another opportunity to get involved if you understand these concepts and internalize, read price this way, right? It's leaving ultimately the opening range high. We're still looking on where we're delivering from and saying, okay, there's trapped traders down here, right? So if these were trapped shorts, why would price come back down there to give them an opportunity to get out at break even? It wants to keep them underwater, and it's going to continue to attack higher prices, okay? So we still have that opening range high. We did clean up some of these internal swing highs, but we left this one here, and we built more, just staying fluid with the price. We built more buy-side liquidity here, okay? We come down, drop down to equilibrium of this range here, right? As we enter the 1150 macro, do we see our checklist being checked off again? Yes, price is going below macro opening price, sweeping a low, and we have this macro SMT. So as we can see here, in relation to this swing low, NASDAQ could not make that lower low, while the S&P did. This is an extremely strong signature. I've spoken about it before in the channel, in the Discord, and reviews, etc., but especially when it's occurring during the macro, right? Then all you're waiting for is what? The close above this SIBI. Now, why is this SIBI important? Okay, number one, look above this from this SIBI's high to these internal highs here. There's no other SIBI that hasn't been referred to yet. You know, we have one here, but we've already referred to that. This one here, okay, was utilized to do what? Send us lower, sweep this lower time frame internal, swing low here on the 1 minute chart, right? So its initial state of delivery was bearish. So even if it was this small of a move, this is how I'm reading price. If we were to remain bearish, when we come back up into this SIBI, would we want to see us close above it, right? No, we'd want to see us reject out of it and go sweep the SMT, which is a bullish signature down here. But we close right above it, and this is our entry because our entry checklist has been met. First and foremost, again, understanding that there's trap shorts down here and there's buy-side liquidity for us to target. Close above, your entry, expansion, right? And icing on the cake, the annotation is not here, but I mentioned often on the channel again, in the Discord, etc. You want to see this remain open. Someone tell me in the comments of this video, why should this be a breakaway gap? Okay, and what's the terminology I typically refer to when discussing the high probability inversion and the breakaway gap relationship? Okay, so let's move forward, but really take your time and study what occurred here. You know, these signatures with macro power of 3 are powerful, right, for our entry techniques and just understanding the importance of time in and of itself, but also what we want to see in these 20-minute time windows, 10:50 to 11:10, 11:50 to 12:10, right? But just from the basic standpoint of, okay, we left all this buy-side liquidity here. These are traders being trapped. Close above a premium PD array is your confirmation. So you can use the practical standpoint and then the technical close above a premium or a bearish PD array as your entry method after the manipulation has taken place. So let's move forward here. This is the same day, again, still December 5th, right? This is where this price action is from. We're still on the NASDAQ 1 minute chart and we're just moving forward, right? So as we go through these examples tonight, as you're doing your review, as you see me on the channel, don't ever feel like you have to catch every move, right? But I want to show you guys how I read price, how these signatures help me understand what is likely to occur when I'm looking at the market, again, with macro power of 3, right? So after we're seeing price push higher, we're entering another macro window. So it's always important as you're entering these macro windows to say, okay, where's the draw on liquidity? Those basic questions like who's been stopped out, who's been profitable. So as we enter this 1250 macro, who's been profitable? Longs. What do we see right at the start of the macro? Price zooms up, sweeps liquidity, and then what do? We start to see a turning point here. Now, this is interesting, and I want to talk about these two balanced price ranges, which of course are BPRs here. This is the first one. And then the second one, how we can utilize them. So the first one can be your aggressive entry. So you might be wondering, okay, it looks like we may or may not have, I'm not sure, ticked into this SIBI here, right? But you might be asking, okay, well, why don't we dig into it deeper? Why didn't we get to 25% of it, 50% of it, or the high, or why didn't it fail, right? We had the macro manipulation, and then look back over here where the inception of the BPR was formed. We have this BISI, or bullish fair value gap, and this SIBI, or bearish fair value gap, right? So this is a balanced price range. Now, if I drag this out in time, right, and time being the key factor and the major advantage as an ICT trader, right, we're understanding that we're seeing manipulation above macro opening price, a sweep of buy-side liquidity, and then it closed back below that BPR, right? And look at how this BPR was being referred to. Rejection, rejection. Yes, we get above it here, right? But only because we were completing the manipulation phase for the 1250 macro. So think about the macro saying, or the algorithm, I should say, being told, okay, macro time, manipulate, distribute. That's what macro power of 3 is, manipulate, distribute, right? When you're bearish for macro power of 3, manipulate above macro opening price, distribute below macro opening price to the opposing side of the range. It can be that simple, okay? But we have this BPR here, drag this out, close below, retracement into it. This can be the more aggressive entry because this is kind of a more advanced entry, right? Or if you see scenarios like this and BPRs like this that were formed before a macro window and that we did cut through but then kind of reclaimed on a close below, right? This can be your first signature and you don't have to enter on this. You can just say, okay, I'm going to see if we can get this close below as the first signature for me reading order flow and understanding that bullish order flow is breaking down, right? So especially after we purge a high here above macro opening price, and especially right at the start of the macro, would we want to see us close back below that BPR if we were looking for a continuation higher? No. And we do that right away, right? So again, that makes this be a breakaway gap. You want to see that left open. Now, if you are taking this trade short from this first upper BPR that we've been discussing here, you want to see this remain open, but just because I want to see that remain as a breakaway gap, I would never jam my stop loss right to the bottom of it, right? I would just put it above this swing high, allow for price to get up there if it wants to. Of course, I don't want to see it get filled, as I've mentioned. I want to see it remain weak and signatures of weakness be shown to me from the algorithm, right? But price can still come up into this SIBI, fill it out completely, and then go lower. So I want to allow for that just in case I'm wrong about these more advanced signatures. I can still be right about the draw on liquidity and ultimately make money and have a winning trade. Okay, so again, if you enter this trade, there's a place where you can move to break even, and that's this lower BPR. So you have, looking at the left side of the curve again, SIBI and a BISI. That's a balanced price range. You drag it out. What does price do? This plays lower, come back up into it. Now, right here, if you wanted to wait for further confirmation and play it a little more safe, yes, you're sacrificing some points, right? But this is still a valid entry. You have the BPR and cherry on top. You have this SIBI here overlapping. Now, let's imagine the SIBI wasn't here overlapping and it was more wicky. This could still be an entry, right? I take entries like this all the time. Balanced price range, right? Now, if you entered up here on this higher BPR, this close below, you move your stop to break even. You don't want to see us get above that, right? And if there was any SIBIs up here in between these two BPRs, you'd want to see that remain open as a breakaway gap. We come right up into it at the end of the macro, expand away to the sell side liquidity pool. So this turning point, the inception of this move down to sell side after the run up, when did it start? During a macro. So it's the understanding of time that will give you the major advantage you're looking for as an ICT trader. Okay? Then all you have to do is be patient in between setups. Now, this was, for this particular example, very clean. I really wanted to review this, especially with balanced price ranges. I get a lot of questions about how I utilize them. But I want to dig into this deeper because with this here, you can say, okay, well, should we expect this quick dump every single time, right? You guys know we don't see this every time, but how can we put together, the higher possibility of certain fair value gaps remaining open as a breakaway gap, because just like anything else in trading, we don't know 100% what's going to happen at any time of the day, right? We just do our best to look for signatures and try to position ourselves to a predetermined draw on liquidity. But if we continue forward here, looking at the same fractal of price, I've put on some more annotations. So using this dealing range, right, as price comes down right here, this is equilibrium or 50%. You can see that level 21,540.75 there. This yellow BISI being dragged across here, that's your equilibrium fair value gap. So whenever I see the first fair value gap that's overlapping or right below equilibrium, if I'm trying to snipe a short reversal all the way to the opposing side of the range, it's very important for me to see how price acts when we deliver to this equilibrium fair value gap. So that being said, the equilibrium fair value gap is a very, very smart place to take partials, to start to trail stop loss, things of that nature, right? But if we're looking for the continuation, which of course ultimately we did get here to the opposing side of the range, we want to see things like this, where when price delivers to it, we have no problem slowing down. We close right below it, right? That's a signature that we're going to reach for at least the next objective in the discount of this range, which is these internal swing lows here. Right, this one and this one. You should add that to your notes. If the equilibrium fair value gap fails and we're looking for sell side continuation, we're going to go to the next discount objective. It can be a swing low. It can be, a secondary swing low like this, an unfilled BISI. That's how I utilize this. Okay, and also this right here, the SIBI overlapping with the equilibrium fair value gap, that's a measuring gap, right? You want to see that remain open, and by extension, you want to see this one remain open. So when we get the close below this equilibrium fair value gap, what can I do with that information? You can start to trail your stop loss above this breakaway gap. And similar to how I discuss how I utilize breakaway gaps in situations like up here, right? I want to see it remain open. I wouldn't jam it right to the low or even to this lower SIBI here. I would want to see both of them remain open, right? Especially after we displace away. I would put my hard stop loss above this breakaway gap, but I would still be allowing for price to wick up there if it wants to, right? But if we were to wick up and then reclaim a close back below the equilibrium fair value gap, then I'd want to see speed below there. And we'll discuss speed in another lecture here on this channel, right? But really start to study the equilibrium fair value gap. And again, if you're still struggling to find your consistency, your profitability, your confidence, take this as the lower hanging fruit. This is still a good trade. This is a very smart place to take partials and just be content with enough as you gain that confidence, as your understanding grows, as you become a better trader, as your skill set, which is just reading price, improves as well. So if we continue forward here, I want to look at S&P's 5-minute chart. So looking at this 5-minute chart on the S&P, there's things that I want to discuss here that are simple, but price is fractal. So we're not changing the way that we read price. We're not changing the way that we look at certain PD arrays and classify them as significant or important to us, right? Not every fair value gap is going to be in play. Not every fair value gap or order block is going to aid in a specific narrative, and we're going to key off, a higher time frame inefficiency for a lower time frame entry, right? The simple manner and the simple way that I can utilize this BISI here, ultimately a bearish inversion, and classify it as high probability and want to monitor this level is just because it was referred to on the buy side of the curve by the algorithm to send price higher and sweep liquidity. So this swing high here, that's the AM session high, right? So its initial state of delivery was bullish. Okay. As we return into it again, as we discussed in the previous examples on the 1-minute time frame, if we were bullish, would we want to see a close below? No, we'd want to see us respect this on a closing basis and continue higher, right? And with this particular scenario, we wouldn't even want to see it close below this one. We wouldn't even want to see it return to it at this point after the swing high's put in, right? And the AM session high is swept. But what do? We close right below it, open, come up into it, and we zoom all the way down here. Now, you can see, what are we falling just short of here? The AM session low. We return all the way back up to a random level? No. This 5-minute high probability bearish inversion. This is a breakaway gap. You don't want to see it get filled completely if you're looking for your short scenario to continue to be in play, right? So if we have this AM session low, this low here is also lunch low. So we're having two session lows in close proximity, which is a high probability liquidity pool. So this in and of itself on the 5-minute time frame, if you prefer that over the 1 minute, this can be an entry, right? You can put a hard stop above the top of this SIBI, which you want to see remain as a breakaway gap. Or if we get a close above this high probability bearish inversion, you can manually close it out, right? But when you see these scenarios, this can be your line in the sand for your narrative. Okay, as long as we remain below it on a closing basis, I'm bearish. If we reclaim it, it's probably a sign that we can attack some buy side again, right? It's simple. So I want to go down to the 1 minute time frame and look at some more signatures here. This is still S&P, and you can still see that I've dragged this 5-minute high probability bearish inversion down to this 1 minute time frame. Right here, this is a clear depiction on what is occurring. Lunch low, which is a session low, falling just short of another session low from the morning, okay? And then we have this internal low here falling just short of it. We're seeing sell-side liquidity built, right? Price zooms up after engineering the sell-side liquidity. And remember, what's our number one priority? Drawn liquidity. Price leaves that sell-side liquidity. So you have a reason to expect price to return there if we see the signatures. It zooms up, tests the 5-minute inversion, and rejects off of that. Now, what is this gray box coming across my chart? The 930 fair value gap. The first fair value gap after 930 is open. Okay, this is an extremely important PD array if we're looking at the 1 minute chart. So using the 5-minute and the 1 minute chart together, if we were looking for a long continuation, a recovery here, we wouldn't want to see us reject off the 5-minute inversion, then close below this significant fair value gap, the 930 fair value gap. And we do just that. We zoom right below it. We come back up into it. And right here, what do? After leaving more sell side liquidity, randomly, and I say that as a joke again, deliver to the tick to the high of it. And then we reject. Okay. After that, this is your inversion. This can be a short. Right now, if you want to wait for a macro power of 3, are you provided that setup here? Yes, in this particular scenario, obviously you're getting less points here, but still study the logic that occurs here. Okay? Lunch low, swing low here, swing low here, ultimately before this retracement, equal lows put in here, and then that AM session low. So as you entered that 2:50 p.m. macro, you're asking yourself that question. Is there a clear drawn liquidity? Yes, down here. Are we seeing bearish signatures? Yes. Rejection off this 930 fair value gap. Rejection off the 5-minute high probability bearish inversion. After we come up here, what are we doing? Going above 2:50 p.m. macro's opening price, sweeping buy side liquidity, SMT up here, ES failing to make this higher high, close below this BISI with a SIBI inside. This is a balanced price range. Return to it, deliver to the low. So we can see these signatures at play. And when you can combine these signatures in price with the time of the day, you can get the best of the best setups. And again, the hardest part, once you get to this understanding in price and knowing what you're looking for, is just waiting in between setups. And if you can master that patience, you are 10 times better than you were before your understanding of price and really macro power of 3. So I hope you guys enjoyed this video. As always, leave comments if you guys have any questions or any other comments on today's price action, any trades you guys took today. I would love to hear that. And I will talk with everybody soon.